will use for transaction monitoring and potential identification of suspicious transactions. And the last one, ongoing monitoring. We verify that the customer, that the basic information of the customer has not changed. We need to regularly update the customer information, and also we need to monitor his transactions. So these are overall the 4 elements of CDD. Now, customer.
Anna, if you allow me, I cannot see your presentation. I'm not sure if our participant can view the presentation.
Let me see.
Okay, thank you very much. Neither our participants can view the presentation.
Okay, give me a second, Panagiotis.
Of course, of course.
My computer is, what happened to it?
This is a live event, so it can happen in every case.
And it's like it does not respond, so I'm pressing it, but it doesn't want to work. Panagiotis, do you have the slides? You want to share them?
Give me a second.
I'll have to leave and come back.
Yes, we can find a way. We can find a way.
It's like it doesn't respond.
Okay, can you see now my my screen?
I cannot.
I have shared it.
We want some feedback from the participants.
No, they cannot view it. Ah, yes. You can. Okay, now the slides are available. That's visible. But you cannot see it. I don't know if someone can let us know if it's from my side. Can see the slides. All right. You can just let me know, Anna, the slide that you want to be.
It's the third one, 4 elements of CDD.
Okay, I'm on the third slide. All right.
I believe at some point I will also be able to share my screen, so I'll tell you.
No problem.
So we are here in the 4 elements of CDD. Here is where we identify the customer, we verify the customer information, we establish the purpose and intended nature of the business relationship, and then ongoing monitoring, both for the customer and regarding the transactions conducted by the customer. So next slide, Panagiotis. Customer verification. Now, companies have face-to-face customers, but some other companies are targeting non-face-to-face customers. For example, traditional banks, in most of the cases, they have face-to-face interactions with their clients. However, now, due to the globalization, the bank started to approach customers that are maybe in other countries. So there are some other companies like electronic money institutions, brokers, dealers, all these types of companies, their business model is based on non-face face-to-face customers. They are trying to attract customers from all over the world. So now, in this case, in the case of non-face-to-face customers, the risk is more because it's easier for a customer to forge a document, to create a fraudulent identity. Maybe he can buy information, stolen information from the dark web and use that information to impersonate someone else. Or he may find a stolen identity and he may present that identity to an institution to open an account. So entities are required to have tools in place to be able to eliminate fraud on behalf of the customer. It's very easy also today to forge a document with the use of graphics tools. There are many graphic tools that allow you to, and when you know how to use them, it's easy to create a forged document. And you know, criminals are becoming more and more sophisticated. For this purpose, the tools that we have, they also need to be more and more sophisticated. We cannot, as a friend said, we cannot beat criminals who are taking advantage to the fullest, the technology to the fullest, to beat them with manual tools. It's important to have the appropriate tools in place to prevent fraud, because fraud can result to significant losses for a company. Yeah. So next slide, Panagiotis. Now, okay, so we need, we said before that when we onboard a client, we collect information.
And I'm sorry, now it's great. We can see your slides.
Okay,
great.
Thank you. So we collect customer information during onboarding because we want to be able to perform a risk assessment. So this slide, what's the purpose of this slide? We don't conduct first KYC, CDD, and then risk assessment, or first risk assessment and customer due diligence. We are doing it, we're using, let's say, information from one to do the other. Meaning, to perform a risk assessment, I need information that I obtain from the client as part of the customer due diligence. I ask, for example, his identity card, his utility bill. I collect his financial information. Why do I need that? Yes, to understand what to expect, but also to identify potential risks that this specific customer may pose on my business. So risk assessment and CDD, they are interconnected. The onboarding questionnaire, we have some information which we use to perform risk assessment. And now the next slide, we are going to see what do we mean by risk assessment. It means to be able to identify relevant risks that may be associated with a customer. So we have the customer risks. It's like, let's say, we categorize the questionnaire, the answers we get from the questionnaire, into 4 major categories. The customer risks, where we answer the question, who is my customer? Geographical risks, where we answer the question, where does the customer has personal links or any other links? What the product, service, and transaction risk is, and delivery channel, how the product or the service is delivered to the client. Is it face-to-face or non-face-to-face? Now, what do we mean? How do we answer the question, who is my customer? We check against the professional activity. There are specific activities that increase the risk of money laundering. For example, sectors vulnerable to corruption, especially in the case of legal person, but also for individuals. It's a very important factor that we need to consider. So the first group of questions, of answers, let's say we categorize them in a way to understand who is our client. Professional activities may be one of the most important elements of our risk assessment. Now, what are the sectors that are vulnerable to corruption? Any sector that can enter into a contract with a governmental authority. For example, public procurement or the construction industry, extractive industries, mining oil, gas from an area, the arms trade, all these pharmaceuticals also that provide healthcare services to the government. These are all vulnerable sectors to corruption and increase significantly the risk scoring of the client, the final, to the final decision whether we will treat the client high risk or not. So also links to money service business, casinos, or dealers in precious metals. All these type of activities are, let's say, very attractive to criminals. So we want to be able to identify whether our customer has links to these sectors. That's why the questions will be very carefully designed, that they will give us answers which we will use to perform the risk assessment. Links to cash-related sectors. Cash remains the #1 preferable method for money launderers because it's completely anonymous, it's completely untraceable, and it will remain as such. And so cash related sectors are vulnerable because it's easy for a criminal to establish a cash-based business and inject and mix, let's say, legal with illegally derived funds. So, and present them to the bank as legitimate. PEPs, of course. PEP is my customer PEP. PEPs are high risk because it's very easy for a PEP to do something wrong. It's very easy for a PEP to accept bribe from a company. So
like the one we have recently.
Eva Kaili, yes.
Yeah.
Yeah, of course she didn't. She didn't manage to inject all this cash to a bank, but that was the next step. Yeah, somehow she had to deposit those funds into a bank account. So yes, PEPs are. That's exactly a very good example, because yes, not only her but her father also was found with the cash. So that's why parents of PEPs are also treated as such. Yeah. So PEP are very vulnerable to bribery, and they are in a position to influence governmental decisions for their benefit and not for the public's benefit. And of course, the background. What is the experience of the client? For example, if I have a person, a 20-year-old guy that says that is unemployed and has 1 million in income, for example, what happened? Why? Or even not 1 million, 100,000. That's why we need to examine the background. Maybe it's inheritance, but maybe it's money laundering. Maybe he's involved in illegal activities. So that's important of examining the background. And again, the screening tools that there are in the market can help entities to identify potential criminal activities if someone was prosecuted in the past. Second, reputation, adverse media. Whether the customer has any bad reputation, any adverse media, this increases, of course, the possibility of money laundering, also allegation of criminality or terrorism. Then we need to check, are these allegations reliable, and indeed we can trust them? What is the source? Is it a website on the internet, whatever, or is it a credible newspaper, let's say? Also, are there any suspicious transactions in the past? something else that's really important. And nature and behavior. Why the customer doesn't have an identity? Is he maybe an asylum seeker, or maybe he's someone who is trying to open an account anonymously? So any of these circumstances need to be taken into consideration in our risk assessment. Another important is the ownership and control structure. In the case of companies, who is the ultimate beneficial owner? We will see about that later. Bearer shares and nominee agreements, again, another tool which is very attractive to criminals. Large or complex transactions allow criminals also to, with one transaction, to launder a large amount of money. If the customer requires unreasonable levels of secrecy and whether the source of funds and wealth makes sense. That's a very important, it's something very important. Everything needs to make sense. Now, regarding to identify the...
Anna, may I collect the questions and let you know now, because we have some questions that are related to your previous slide, or shall I leave it at the end?
That's okay, you can ask me the question.
In regards to the PEPs, I have a question about, is it right that PEP for once is lifetime PEP, or once he stepped or she stepped down will be treated as a normal customer?
Yes, very good question. In PEP, in the case of PEP, there are different regulations in different jurisdictions. For example, in the European Union, once a PEP is not always a PEP. You are allowed to reassess the PEP and decide whether that specific PEP still has influence and significant power. So this is the situation in the European Union, but in all other, not all, but in many other countries, once a PEP, always a PEP. So it depends on the jurisdiction that you live. In the European Union, at least for 12 months after a PEP ceases to be a PEP, you continue to treat him as such, at least. But it doesn't necessarily mean that that you will stop treating him as PEP. You need to reassess whether there is or there is no further risk. Yeah, so it depends where, under which law you are subject. So geographical risk, yeah, here we answered the question where. Not only the nationality, not only the country of residency, but also in the case of legal person, the main place of business, personal links, assets in high-risk jurisdictions, for example. Why are they? Is there explanation for that? And most important, incoming and outgoing funds. Here it's very easy. It's not easy for the customer to lie. You see where the funds are coming from and where they are going. So at some point, you will be able to identify if there are any potential risks. Now, product, service, and transaction. Criminals love anonymous products, complex products, large value and volume and cash. We have already said that. And face-to-face and non-face-to-face. We have already covered that. Now we want to focus a bit on the challenges. And here is where you can write in the chat room, what challenges do you face? Because here we will only discuss a few of them. Challenge, I will not say number one, it's not the most important, but it's one challenge is stay up to date with regulatory developments. This is not an easy task, but it's very important for an AML officers to keep up to date with what's going on around the world, the regulatory developments, and immediately to update the policies and procedures. We will see, for example, the upcoming changes that we expect to see, at least in the European Union. But for every regulatory update, and not only for every regulatory update, if we see that something happened with the customer and there are additional cases where additional risks, then we need to amend our policies and procedures to mitigate those risks. And it's something that we have an issue with some entities. The policies and procedures sometimes are not completely updated, and when they are not updated, it means that we are not covered with the risk. We have not managed to mitigate our risks, because in this environment we work, it's a fast-moving industry. The more we learn as compliance officer, the more sophisticated criminals become. So it's important to stay up to date.
We have received from a participant of ours about the challenge that he or she faces verifying the source of fund and source of wealth.
Yes,
This is a challenge that
yes,
faces.
there is actually no correct answer here, because it depends on what the customer states. So if he says that it's inheritance, you can ask something from the advocate, the person that was involved. If it's the sale of a company, you can ask for the sales agreement. If are proceeds of a business, you can ask for the financial statements, for example. It depends what the answer is. So every entity must have a list of, potential source of, let's say, what the customer says and how to verify what the customer says regarding the source of wealth and source of fund. It's challenging. For example, I'll give another example. If he says that it's from crypto minting, okay, can he can prove that. We can ask for we can see that from the blockchain if we are using a blockchain analytic tool, or ask from the customer. Whatever he said, we need to see how can I verify what the customer says. So it depends what the customer says, because source of funds can be, unlimited. Funds are coming from everywhere. Can come from everywhere. So it depends.
We are receiving many questions, but I guess we need to move on as well. So
okay, look,
yeah.
Please provide me the questions and I can answer the questions either personally, or maybe I'll create a post on that. But it's please share the questions. We will have some time, I think, for questions at the end. Manual processes. Many companies still rely on manual processes to identify risk and to monitor their risks. It's very dangerous. As we said already, criminals are innovating, are finding new ways to launder their funds, and we need to find new ways to monitor those risks and be able to identify this a specific trend. That's why we are not doing a manual job unless we are, a small company or a company that onboards 2-3 clients a day and has 10 transactions per day. But if we are a company with a lot of transactions, we definitely need a transaction monitoring tool or any other technological tool that will enable us, they enable to generate, for example, alerts, so we are able to focus on the more important aspects on the business. Now, another challenge is find appropriate technological solutions, another challenge. So in the case of sanctions, for example, if we employ a tool, what type of sanctions list does this specific tool check? What type of package am I going to buy? For example, we had a recent case, Bittrex, a crypto exchange. It was fine because it failed to prevent persons which are located in sanctioned jurisdictions, in sanctioned countries, from using its platform. And it's not that they didn't have a tool in place. They had a tool, but the tool was checking against specific lists, but was not checking against some other lists. So it's very, very important. Identifying PEPs, that's another challenge that we face. PEPs are vulnerable to corruption and bribery. So it's something that we need to be able to do it. Again, with the use of, with technology is always on our side. Criminals are using technology for their benefit. Let's do the same, yeah? So since we have questions, this is regarding the question that we have now, who is the beneficial owner? I'll stay a bit on that because it's one of the greatest challenge. What happens? Now, criminals, first of all, they know what they're doing. They are doing their homework. They know what jurisdiction has what type of laws, what are the gaps of each and every regulation. So they create an ownership structure, or they're using a money laundering method which will enable them to remain anonymous and the beneficial owners to remain hidden. So they know which jurisdictions allow, for example, they have high bank secrecy laws. They don't provide information to even the police about their customers. It's really, really important. By the way, the FATF has issued guidance on PEPs, so it's a good source of information. We need first to understand that it's always a natural person. This is according to the FATF, according to European regulations, according to every national regulation, and is the person which ultimately owns or controls an entity. This is the by default definition. It's not my definition, it's the FATF definition. Now, what is the challenge here? Since they know, criminals know every gap in every single regulation and in every single country, they know where shell companies are allowed, and they love shell companies because they put this type of shell companies. What's a shell company? It's a company with no business activities and no physical presence and very little employees. Some people call it mailbox company because you can create one with only with a registered address. So criminals know where these shell companies are allowed and use them as part of complex ownership structures. And usually these complex ownership structures with various layers of many companies are created in a way that at the end you say, there is no beneficial owner. That's what they want us to believe, that nobody benefits from this company. But indeed, is this possible? Yes, maybe in some cases nobody benefits more than 25%, because in most of the countries, a beneficial owner is someone who owns or controls more than 25%. But in most of the cases, there is one person who controls more than 25%. However, they create on purpose the structure in a way to make us believe that there's no beneficial owner. Okay, so this is a challenge that we have. It's not easy. We don't stop until we manage to identify the person who benefits from the company. Maybe he's not the shareholder, but that's the beneficial owner. It might be a shareholder, but it might not be a shareholder. It might not appear as a shareholder, but ultimately to control an entity or an ownership structure. Now, how do we satisfy the regulator? Some people say the regulator is never satisfied, whatever you do is wrong. Yes, some regulators are using check boxes, they want to see things, but we need to remind them in some cases that they need to act on a risk-based approach, meaning not all entities are the same. Each entity faces different risks, so it's not possible to ask from an entity to have the exact same measure with another entity. We need to be actually, when is CDD sufficient? When the compliance department is satisfied that it understands who the client is, where he has links, what type of products he requests, and how he approaches the company, face-to-face or non-face-to-face. Plus, why we have classified the customer as low risk. Can I justify that to the regulator? If yes, then okay. Or why I have classified a customer as medium risk and not as high risk. I need to be able to justify to the regulator. This is where we have succeeded with our customer due diligence. Not only tick the boxes, it's not enough. So we are coming to the end, and then I will be able to answer some more questions. Some upcoming regulatory developments in the European Union. So maybe with all that, what else can change? Yes, many things are changing in the European anti-money laundering framework. Last year in July, the European Commission announced new measures. They are not yet implemented. Of course, they are in the process to be voted, and around 2024 we will see these changes. First of all, AMLA, AML authority. This is an institution, a body that will directly supervise some of the riskiest financial institutions within the European Union. Plus will coordinate, will supervise, let's say, supervisors of the member states. So they will create, let's say, a more harmonized approach to AML. And something else that it will perform is to coordinate financial intelligence units. A second change, the second part of the package is a new AML regulation. A regulation is directly implemented in all European member states. There will be no need to be transposed into the member states' national law. So we have this AML regulation directly implemented. However, recognizing that some countries have different risks, they will create the 6th AML directive. This 6th AML directive that they have announced will completely replace the 4th and the 5th. No, the 4th as amended by the 5th. So we will have this 6th AML directive, which will need to be transposed into member states' national law. Okay, and we will. It will be again. It allows some room for interpretation for the member states. And the wire transfer regulation. This refers to the travel rule, which was we have already seen some crypto companies to implement the travel rule. So this regulation will be. I think it is updated. Yeah. So to include this requirement not only for financial institutions, because financial institutions comply with this rule for many years now, but also crypto entities. So I have finished with my presentation. Panagiotis, would you like to take some questions?
Yes, this is what I'm trying now to track. I have a question as well, but we have received many questions. Thank you. Thank all the participants for the questions. One have received, are there any suggestions how non-face-to-face risk can be mitigated? This is the question.
The non-face-to-face risk can be mitigated only with the use of ID verification tools if accepted by the national regulator. So another method is to use intermediaries in that specific country, which what we say introducers, but I'm not sure how convenient that can be for a client. Most of the companies are using ID verification tools. Some of them are also using artificial intelligence and other regulatory and other technological development solutions. So there are many things that, these ID solutions now are doing a great job. But completely mitigate the risk, you cannot. There is no risk-free case.
Okay, thank you for that. Another question, going back to earlier on for documents without system, is there any way to help identify certain things that might show that something is a fake document?
Again, the use of verification tools can help us mitigate that risk. A forged document, you know, these companies that offer these ID verification tools are doing a great job, but let's be honest, criminals innovate, they find new ways to bypass the strong measures of these companies. So we cannot again mitigate the risk to zero. And we need to know that and include that in our risk management policy. So to realize that this is a risk that exists and will always exist, because the more these tools are improved, the more criminals improve their methods. They always stay one step ahead.
Thank you. We have a couple of questions from Kyriakos. Is MRZ mismatches when we screen the passport? Sometimes they do not match the ICAO standard, but have been used for travel. They have stamped. How do you approach such an obstacle?
I'm not sure if I understood the question. The MRZ code.
May I repeat it again?
Yeah, please.
All right, MRZ mismatches. When we screen the passport, sometimes they do not match the ICAO or ICAO standard, but have been used for travel. They have stamps. How do you approach such an obstacle?
If the MRZ doesn't match with the information provided on the passport, it's forged. And probably the stamps are fake. That's what I would say. I mean, the MRZ always matches with the information that are provided on the passport. By the way, there is the European Union has a website, Prado, Prado, where it shows all the passports and travel documents of many countries, not all countries of the world, but many countries of the world. So if we have a passport, we can go on that website and see if at least it looks like the real passports or IDs issued by that company. So it's a good idea. We can use that tool also. It's free. I mean, it's from the European Union, but the MRZ is a must. I mean, it actually comes from the information provided on the passport. It cannot be different.
Okay, great. And another one question, what are the risks on your side when a payment is made by a client prospect and shortly after the sender requests a refund from you? How to make sure you are not participating in any potential layering of illicit funds?
Okay, so in this case, we can ask the customer to, if he wants a refund, to refund the funds to the same account he has provided us. So in this case, we are not taking the money and send it somewhere else. And if the customer says, I have closed my account, we can ask a proof for that from the bank, that he has closed the account and to give us another account for the same customer. That's how I would mitigate that risk. Not to send the money to another account, to the same account.
Okay, and another question from Marco Liarana on the topic of adverse media, how to prevent the ongoing tendency of trial by media conflicting the principle of presumption of innocence, leading towards a very negative impact for our society as such.
A big question. Can you repeat that again?
Yes. On the topic of adverse media, how to prevent the ongoing tendency of trial by media, conflicting the principle of presumption of innocence, leading towards a very negative impact for our society as such.
Okay, so when we have, sorry?
Is it clear or? Maybe Marco could provide some more information on that.
Okay, look, adverse media, it's important to, I'm not sure if I got the question 100%. Marco, you can contact me on either by email or on LinkedIn Messenger to clarify the question. But regarding adverse media, you know, things are changing constantly. Maybe you have a customer who didn't have adverse media in the beginning, but has after that. That's the importance of regular screening of all the clientele. Screening is performed on onboarding, but must also perform at regular intervals. At every customer revision, when we revise the customer information, but also every, I don't know, 1 month, 2 months, there are companies, large banks that are screening daily their clientele. Depends on the risk that we have as an entity. So it's important to screen our clients often to be able to identify any changes in the customer. Okay, if I didn't answer your question, please send me an email. Here is my email on the presentation.
Yes, as well, Marco can provide some more information on that if it's not fully answered. So let's move to another question. Do we count any prohibited country in place of birth as a nexus, and what will be the next course of action?
So in the case of nationality, we have prohibited countries. Now, it depends again on the risk appetite of the organization. There are banks, for example, that will say, no, I don't accept the client. He's from a prohibited country. I don't care if he lives 20 years in a European country, for example. It's because they have a low risk appetite. They cannot, they are not willing to undertake any risk. I'm not saying this is wrong, this is correct. We don't care because it's a company policy. But there are some other companies that might say, okay, this specific customer is from a prohibited country, but you know, he lives many years in a European country, so I will accept him and treat him as high risk, for example, because they believe that they can manage this risk. Again, it depends on the company's policy. Now, what some companies are doing, they place more emphasis. I mean, when they collect the customer information, the country of residence has more importance or more weight on the overall risk scoring of the client than the country of nationality. For sure, we cannot ignore the country of nationality, but the country of residence can have much more weight than the country of nationality. So this is how we assess the country risk.
Okay, excellent. And now about what is your best approach when it comes to complex business structures, including entities incorporated in tax havens?
Not an easy task when they are in tax havens. My approach is, first of all, I always ask for the ownership structure, which will be signed by either a senior manager or the beneficial owner. And from there on, it's easier to verify. You know, it's like a map. You know where to go to follow, what route to follow to reach to the beneficial owners. Now, when there are tax havens involved, this is where we need to conduct enhanced due diligence, scrutinize the transaction, ask, yes, we cannot get information from entities that are established there. In some cases you can, of course. However, you can get information, you can ask for the customer to give you the information that you need. So it's a customer that will provide you the explanation. And the most important thing is to ask ourselves, does it make sense is what the customer said. Does it satisfy me? Or, in some cases we feel that something is wrong. We feel that the customer is lying or something is hiding. And in most of the cases, our instinct is correct. So we need to insist on providing information. What we shouldn't do is just accept that as a fact. Okay, tax haven, I cannot do anything else. I give up, I accept the client, and I move on. No, we need to discuss with the client and to ensure that the information he says that it makes sense and it's to be satisfied as compliance officers.
All right. Another one question. Honorary consults. Trying to have a look once more. Honorary consults are not included in the PEP definitions in most countries. However, they also pose a higher risk as indicated in the EIMF investigation, shadow diplomats. Would you classify them as PEPs or not?
Tell me again the first two words.
The EIMF investigation, shadow diplomats.
Read me again the first sentence.
Yes, honorary consults are not included in the PEP definition. Yeah.
Yeah. This is where we need again to understand if there are any risk involved. It doesn't mean that if a customer is not a PEP, is not high risk. So maybe we will not treat him as a PEP, but if we feel that there is some risk with this customer, I can treat him as high risk, not as a PEP, but as high risk, and at the end implement the same measures, like in the case of PEPs. So if I had this type of customer, I would treat him as high risk. If I had any, if I saw that he has power, he has influence, or if I believe that the risk is equivalent to a PEP. I mean, nobody prohibits me from classifying a customer high risk for other purposes other than PEP.
Right. Thank you once again. Another question. Those UBO regulations, again, Marco, about the UBO regulations, but with 5 shareholders holding an interest of 20% and one administrator who is serving as a money mule, as a decoy. How to deal with that?
Money mule means that someone is behind. So if you have this information, you need definitely to identify the beneficial owner. Now what happens is that there are some, there are cases, for example, that you may have not 5 people of 20% shareholding, you may have 10 people of 10% shareholding. However, what happens is that, as we said, criminals, they know very well the rules and they are trying to hide. So it's very common for a criminal to appoint 5 people with 20% shareholding. And that's our job. When you ask, the best way to identify, to ensure that the customer is indeed the beneficial owner is to ask well-designed questions. If someone is a manipulator or a strawman, he doesn't have a lot of information. He knows some basic information for the company. But if you ask more questions about the business, the plan, and other questions, he may not be able to reply. And an indication also for that is the source of funds, who is providing the funding. Yeah. So if another person really controls the company, that's the person who is actually the beneficial owner. So these are 2 ways that you can deal with this type of entities. Now, if there are indeed 5 people and of 20% and all fund the company by 20%, and you don't have any reason to believe that anyone else controls the company, then you can identify, at least in the European regulations, we are allowed to verify the to identify and verify the senior managers, but in practice, companies still would identify all 5. Some companies would choose that path, to be sure, to be on the safe side.
Okay, I think we need to wrap up. It's 5 p.m. Thank you very much, all of you, for being here today. We had more than 350 participants from Malta, USA, Lebanon, Germany, UAE, Netherlands, and so forth. That's excellent. The questions will be answered to you by Anna, and will forward it to you. The slides will be forwarded to you as well the next few days, and the video recording will be available on the EIMF YouTube channel. So once again, would like to thank you for being here, and we hope you have enjoyed the presentation, and hope to see you soon in a future webinar. All the very best to everyone. Good afternoon, and bye-bye.
Good afternoon. Thank you.